Banks have been doing really well in 2024, and they did great at the end of 2023. Part of the reason is that in 2023, in the springtime, there was a lot of fear around banks. Silicon Valley Bank was feared that their bankruptcy was going to extend to other banks, so it became quite concerning. The other concern out there is that commercial real estate, there's a lot of loans out there that banks are holding those loans, and that might cause some losses. But a big tailwind has been these interest rates. Banks are earning a lot of money on the higher interest rates. And I think that's going to really benefit banks. The other positive around banks is that the economy has continued to stay strong. People have jobs, people are spending money. They're spending more money because inflation's up. So there's a lot of positive tailwinds for banks going forward. I selected a really nice bank to put some money to work in 2023 in Citibank, and it really paid me back well. My stock appreciated really well, and I got paid a really nice dividend from Citibank. I chose Citibank because I thought it was better discounted than the others like JP Morgan. I've owned JP Morgan, Chase, but decided to sell it a couple years ago once I made a fair amount of money on it, thinking that it was a little too high priced. I compared all the banks and settled on the big bank that I would own would be Citigroup, and I'm glad I did so. So far, so good. We're coming up on the earnings. The earnings is this Friday. It is on April 12th. I'm recording this video on April 10th, kind of as a preview to those earnings, and just share with you the analysis I've completed on Citigroup, why I'm an investor. More importantly, what I plan to do going forward with this bank. It is a good bank, but all investments have to be reevaluated. I certainly do that. I do it twice a quarter on every investment I make, and it's time to take a look at Citigroup, see if it's a stock I want to continue to own, see if it's a stock that I want to add shares to, or maybe sell some shares, or maybe sell the whole position. I'm going to take a look and I'll share my conclusions on what I'm doing with Citigroup at the conclusion of this video. This bank is well diversified. They're not just a traditional bank. They're into a variety of businesses. They have investment banking, they have business banking, they have credit cards, they have a variety of businesses. So they're well diversified, and I will dare say they're too big to fail. Banks prove that the US government's not going to let big, massive banks go bankrupt because it would just hurt the economy too much. And this I put into the category of too big to fail. I hate saying it, but it's just reality. It's one of the realities of our economy that we have to protect certain industries because it's good for the economy. We want the economy to be good so that everybody has a job and people can make money and people can earn a living. So let's get into Citibank and look at their fundamentals. I'll look at a valuation that I've created for this bank, and I'll share my conclusions on what I plan to do with my stock in Citigroup. The Citigroup stock is doing really well. If you look at the low point in late October to where it's trading today, you're up 57% if you caught some shares in the late October timeframe. That's just a great return. That's right up there with tech stocks and so forth. And what's great about Citigroup is it pays a nice dividend. It's 3.5%, which is nice. Great appreciation and a really nice dividend. I'm not the only one that really likes banks at this time. Jim Cramer of CNBC is really commenting positively on banks. And here's a clip where he really showcased Citigroup just a few weeks ago and showed how they're on a really nice tear and that they really are setting up to really do well in 2024. Looking at the fundamentals of Citigroup, it looks really good. Year to date, it's doing 17%. And over the past year, it's up 29%. And again, I commented that if you look at the low point up until where the stock is today, it's up 57%. The market cap of the company is 115 billion and the revenue is 78 billion. So you're paying about 1.5 times revenue for the company. Really strong net income. They're doing really well from a net income perspective. Their earnings per share is going to be really good going forward. Really low PE. I love a 10 PE. This is a growing bank now, and they have a really low PE. I think it's got more upside, I believe. A lot of analysts cover this, and what's interesting is most of them have a buy rating, but their price target is a little low. It's at $60.62. And that's pretty much where the stock's at now. But it's good that they have evaluated the stock and believe that it's a good buy. Maybe that dividend is really driving them to recommend the stock. The dividend is at 3.5%. So it's nice to see an appreciation in the stock, and it pays you really nice income. It's expected that the earnings per share for Citigroup is going to increase a lot. It's going to go from $6 per share up to $7.29 per share, and then $9.18 per share in 2 years. That's really good growth in their earnings per share. I'm excited about that. If they can hit those marks, this stock is really going to go up. I run my own valuation for any company I invest in. In the case of Citigroup, I value the company using their book value, their PE value, and their earnings per share value, three different methods. And I came up with the fact that I think they still offer a 13% discount. And that's a 13% discount after the stock's really done well. It still has some room to go, especially if the news on the company continues to be positive. They can show top line growth. They can show growth in earnings per share. This stock, there's no reason why it cannot go up. It has proven that it wants to go up. It would just continue that path forward. That dividend is at 3.5%. That's very attractive to income investors. So there'll be more investors wanting to buy into Citigroup going forward. So should I buy more shares in Citigroup, hold my shares, or sell my shares? Well, I look at three main things in any investment. First, it's all about the company. In this case, it's a financial services company combined with a bank. And as I look at Citigroup, I like that they've cut their costs. I like the leadership, that they're really serious about making the bank profitable. I like those aspects of the company. I like that they're growing. They're expecting to grow their top line. They're growing their earnings per share. I really like those things about the bank. Therefore, I'm really positive on the company aspect of Citigroup. Second thing is the balance sheet is in good health. The balance sheet is in great health for Citigroup. They're not exposed to too much commercial real estate, which is a good news. And they have really good earning potential on those high interest rates. So overall, the balance sheet's in really good shape. And then the third topic is a discount on the stock. Am I getting a discount on the stock? Now, first, I hold Citigroup in high regard. I think it's a good bank. It's one of the bigger banks. It's a safe investment. Therefore, a 13% discount that I calculated is a good discount. I'm going to continue to buy shares in Citigroup and continue to build an already medium-sized position that is paying me a nice dividend and is already rewarding me with really good appreciation. That's my review of Citigroup. I hope you found it interesting, and I really appreciate you watching. Keep in mind, I like sharing my journey as an individual investor and each investment that I make. By no means do I recommend you buy Citigroup or sell Citigroup. I give no financial advice. I'm just sharing my journey as an individual investor. Thanks again for watching.